Stephen Saywell is head of Forex strategy at BNP Paribas. Do you think it was an aggressive move by the Fed? Would you put it that way?
Well, I think certainly looking at what the market was expecting, it's probably slightly disappointing from expectations.
We didn't get QE3.
We didn't get the QE3 that markets were focusing on. But our view at BNP Paribas is very much that it is a significant move. It is an easing of policy. And what's particularly interesting is that the Fed's made it very clear they stand ready to do more if necessary.
And that is the key, isn't it? That's also the key when it comes to where we expect the dollar to go. I mean, some were saying that, you know, the lasting impact could actually be a stronger dollar because you didn't get the QE3, but we also know that the Fed isn't, well, they won't come out and say it, but they don't exactly want to see a stronger dollar, do they?
Well, I think there's a few points in there. Firstly, yes, the dollar has been rallying in the past few days, mainly because of an unwinding of risk. And the dollar has been rallying against currencies like the Australian dollar, the New Zealand dollar, the Canadian dollar, where risk has been concentrated. But clearly it's been very weak against things such as the Swiss franc and the yen, yes. Look, going forward, I think this policy move is clearly a dollar negative. We think the dollar will remain the funding currency of choice. And so our view is that we would continue to look for more downside.
Even in the short term?
I think certainly in the short term we might see some unwinding of risk. So that's a good differentiation to make, and particularly we might see a little bit of relief in dollar yen, a little bit of relief in dollar Swiss, but certainly if we were to look 3 months ahead, we think the dollar's going to remain under pressure.
Right. Well, in that case, what the heck do the Swiss government and the Japanese government do about their currencies, which are obviously going to remain safe havens?
Well, I think they're in very difficult situations. We've seen attempts by both those authorities last week to try and do something with their currencies. Neither have been successful. And I think the bottom line here is that much larger issues are at work here than clearly Swiss and the Japanese yen. So it's very difficult for those authorities to take on the might of the foreign exchange markets.
What about the euro? What are its prospects? I mean, if you have to hold dollar or euro, which one would you rather be holding?
Well, I think at the moment we would go for the euro. And the reason for that is in a world where many central banks are keeping policy rates very, very low, potentially going to things like quantitative easing, the euro stands out. And assuming that we're over the debt market concerns, which there is evidence of.
That's a big assumption, though.
It certainly is a big assumption, but I think the market has got what it wanted as far as purchasing of Italian and Spanish bonds to get their long-term yields down.
Right.
That has happened. The euro does look to be quite positive, and we tend to think the euro can do quite well going forward.
What about emerging market currencies? Is there some money to be made here? Because on the one hand, these emerging markets are dependent on the U.S. and on Europe and on developed markets for their growth, and that's going to be hit because we do have a slowdown in the global economy. On the other hand, of course, they could benefit from easing by the Fed.
Well, I think generally speaking, we like emerging market currencies. We think they're going to do well because, as you point out, that's where the growth is. I think near-term prospects are very driven by risk. If this Fed move is successful in stabilising equity markets, which evidence so far seems to suggest it has been, then emerging market currencies should do well. But they're very much responsive to risk, so that's how we would look at it.
Which offer the biggest opportunities for making money, say, over the next 6 months?
Well, certainly in the G10 world, we tend to think it's old favourites like the Australian dollar will continue to do very well, and I think Asian currencies also will survive this quite nicely.
Very quickly, the pound, is that an alternative safe haven, or is it headed lower as well?
Well, we're fairly bearish for the pound, and I think the reason is monetary policy. I think there's a strong chance we do get further quantitative easing in the UK.
Interesting. Okay, thanks very much, Stephen Saywell. Appreciate it.